Welcome. So the question is, how much money printing, monetary creation, are the central banks of the world doing? And are they doing so much as to cause inflation at some point? So quick answer, no, there will not be any high inflation, hyperinflation, or even aberrant episode of inflation. But to see what is really going on, we will look at the most up-to-date data on the amount of quantitative easing, also known as monetary creation or unofficially money printing, done by all the central banks of the world, because you cannot look at just the US Federal Reserve or the European Central Bank or any one central bank in isolation. You have to look at all of them in combination in relation to global forces, and that will tell us the true story about what is happening in terms of monetary creation across the world. So a firm called Yardeni Research, run by Dr. Ed Yardeni, and this is even his phone number if you ever want to call him, they publish a report about what the quantitative easing levels of the various central banks of the world are, and we walk through some of the charts about this. So these are the four major central banks of the world: the US Federal Reserve, the European Central Bank, the Bank of Japan, and People's Bank of China. And it goes back to 2007, but what is recent is of interest over here. Because of the coronavirus pandemic, all the central banks of the world increased the amount of liquidity they were doing considerably just to cushion from the economic shock effects. Now, these four big central banks amount to about 85% of the world's combined monetary creation. It's not all of it, but the four of these combined are about 85% of it. And as we scroll down to the next chart, this is where it gets to the very important data. Quantitative easing started from the prior financial crisis, 2008, 2009, and they kept thinking that they just had to do a little bit more and then they would pause. A little more, they would pause. And the only reason that the central banks of the world and the PhD economists that run them kept thinking that they have to stop this quantitative easing is because they assumed this caused inflation, and they thought somehow, somewhere, this inflation will show up any day now. And I have been saying for many years, if you look at my blog, I have a huge amount of archives predicting all of this, that this type of monetary creation does not cause inflation up to a certain threshold, and that's a pretty high threshold, which they rarely ever breach. So they should keep on doing this type of monetary creation because it is, in fact, increasing the asset prices of the world without causing any inflation in commodities or other components of people's costs of living. And therefore, it comprises a new layer of money. It also comprises a monetization of technological deflation, and in some ways provides an opportunity to move the burden of taxation away from humans and onto automation. But that's a topic for another video. To look at the amount of cumulative monetary creation, notice how when they finally stopped in 2018, they kept it flat for a while, and obviously that was not sustainable. They had to catch up to where they were and get back to this trend line. Now see where my cursor is. You see how it's following a general exponential trend line. And since the start of the coronavirus crisis in March 2020, they have done in 1 year over $10 trillion of new money printing. I have often said that March 15, 2020 was what I call the Netscape moment of economics, because that was the day in which the Federal Reserve and other central banks of the world were forced to stop their very scarcity mentality view of monetary policy and go towards keeping the amount of money printing consistent with technological deflation, because technological deflation offsets whatever inflation might have arisen from this type of monetary creation, and therefore we don't see inflation from this. That was a day in which the Federal Reserve lowered interest rates to virtually zero, and then also started a huge amount of monetary creation, as did the other central banks of the world. So the sum of all four central banks is this chart, and that is how much cumulative monetary creation has been done. 29 trillion to date, just in the last 11 or 12 years. Now, the decade of the 2010s had $23 trillion. So if we take from the start of 2010 until the start of 2020, I say the next decade, the 2020s, will have 100 trillion, because that is what is required just to keep up with the exponential progress of technology, as I write about. But this is the latest update as of March 2021. You can see, despite the recent high growth, it's flattening out somewhat, which leads us to what is the actual growth rate, which is the ultimate driver of inflation? I have often said in my Atom publication that world monetary creation has to grow at a compounded annual growth rate of 16 to 24% a year, somewhere within that band, 16 to 24% a year, just to keep up with technological deflation. And this chart is the year-over-year percentage growth rate in the total world amount of quantitative easing. So the chart we saw above, this is the year-over-year annual growth rate. It sometimes peaks above into the teens, but sometimes goes back to zero and even negative. So the long-running rate definitely stays well below the 16 to 24% band that I talk about, except during coronavirus, because many types of economic activity were shut down. They did excess amounts of liquidity, and the year-over-year growth rate peaked at a very high level, about 46%. This is a level even I would say could cause inflation because, like I said, the normalized band is 16 to 24%. Still a huge amount when we're talking about growth rates over trillions upon trillions of dollars of a base already. But now, because it is kind of tapering off, there is still monetary creation happening, just not at the same extreme rate. Now the percentage growth rate has fallen, and now it's only 34.3%. Only 34.3% if you combine the four largest central banks of the world. That's still above the 16 to 24% band that I talk about. But a couple months of just relatively minor amounts of money printing will very quickly push the year-over-year growth rate back down into the 20s and even the teens, thereby precluding inflation yet again. Now, I don't know exactly how much of a lag effect there is. I don't have that much of a precise read on how much delay there might be between monetary creation and potential inflationary forces, but I don't think it's very high. Therefore, all this fear about hyperinflation is completely misplaced. If it were to happen, it would have happened here when the growth rate of monetary creation was about 46%. Now that we're already past the peak growth rate and rapidly plunging back down to this normal band and possibly even zero, the chance of inflation is already much lower than it was even a couple of months ago. For this reason, the monetary creation that has to keep going just to halt deflation will yet again normalize in the 16 to 24% band, but now we're doing it from a high base. If the cumulative base was $30 trillion, as we just see from this chart above, just to do 24% growth from that point, right now it's 29 trillion, so let's say 30 trillion, just to do 24% growth from that point is another 7.2 trillion in a year. And the year after that, it would have to grow even more just to keep up. That's why I say the 2020s will have $100 trillion of monetary creation, and you still won't see inflation in commodity prices or in the consumer price index, the CPI. All these people who are piling into gold and silver, they are going to be let down tremendously because A, there's not going to be inflation, and B, even if you thought there was going to be inflation, gold and silver is not the thing to buy because technology can merely increase the supply of gold and silver to a much greater extent than was possible 30, 50, or 100 years ago. So this report, which is something you can check pretty often, tells you exactly what the numbers are about world monetary creation, cumulative monetary creation, and the year-over-year percentage growth rate, which I contend has to rise at 16 to 24% a year. Most of the established economics thought in the world, created by all these PhD economists, ivory tower eggheads, they still think that this type of monetary creation causes inflation. They've been wrong 100 times, They've predicted 100 of the last 0 bouts of high inflation. This does not give them pause. They don't mind predicting something that never happens. PhD economists are not people who think their predictions have to be right, nor do they actually look for any logical or rational explanations for why their theories have been failing. But even they, to be fair, are not as bad as these lunatics who are into gold and silver and saying, buy gold, buy gold, buy gold, because there's about to be inflation, even though the first $30 trillion of money printing has not caused inflation. But anyway, it's a little bit of a rant, but this is how you can check on the actual monetary creation data of the world, the cumulative amount of money printing, and how much new money printing can be done just to offset technological deflation, and how we are about to be in an age of very high abundance, even by the end of this decade, if governments and policymakers recognize the new economics of technology, the linkage between technological progress and monetary creation, and how more money printing merely is consumed by technological deflation to create more technology, as I explained in other videos on this channel. This report will keep you apprised of what the latest data is on money printing, and you'll be able to see it on a month-by-month basis. So I hope you found this video informative. If you like this type of content, I encourage you to upload this video and subscribe to this channel. Thank you for watching.